Hi, welcome to Elevate Market Chat. This episode was recorded October 16th. With a relentless move higher in stocks, Shane and I get into sectors pushing it higher. AI has certainly been creating a lot of buzz, but isn't necessarily providing all the positive momentum. We discuss the highest moving stocks for 2025, how utilities can actually be an AI play, and wrap up by discussing OpenAI. Thanks for tuning in. Hey Shane, how's it going?
Kyle, I'm doing well, buddy. How are you today?
Doing good. We got a pretty big rainstorm for a week over here and finally cleared out. So sun's out and it's feeling like fall.
Nice, man. Yeah, it was a little chilly here in Florida over the past couple days. I had to put on some long sleeves this morning when I went out to the car. So, I think that means it's like, less than 60 degrees. That's cold. So, nothing like Colorado, but it's getting chilly down here.
Yeah, that time of year. So, you know, I think since the last time we chatted here, central idea still remains the same, but we are in this market that is relentless. We're seeing inflation not go down. Things just kind of keep moving along. But just checking in with some of the major indexes. So the S&P is up almost 15% year to date. Nasdaq is up 18. The Dow's up 10, and then gold again, inflation. It's sitting at 57%, which is when I updated it this morning. I think we're up another 2, maybe 3% right now. So you just cannot stop it. What have you been paying attention to, or kind of status quo for you?
Well, full disclosure, my headset cut off a little bit, so I didn't hear all of what you just said. I came in when you were talking about some of the year-to-date returns. So I don't know if I missed something else. Sorry about that if I did. Um, yeah, I don't know. I mean, yeah, pretty much paying attention to all the same things we normally pay attention to. I think you just kind of hit the major indexes. And gold is obviously trying to tell us something. It's been trying to tell us the same thing for a long time now. So gold is up like another 10%, I guess, for the month. I mean, through the end of September, we were up 47% for the year in gold, and you just said we're up 57% as of this morning, plus another 3%. So call it 60% or so year to date, versus the major indexes, a fraction of that. Um, I think gold is just literally trying to tell us that the monetary regime globally is probably shifting. And I wrote about this, I think, in my most recent commentary. But there's just a maybe not. Maybe it was in response to a question I got from a client who said, "Hey, do you think gold's in a bubble?" And I really don't. That was my answer to the guy, is that I really don't think it's in a bubble. There's too many fundamental um, reasons that gold can be higher, and all the central banks want to buy it. They used to want to buy dollars. They used to want to buy U.S. Treasuries, but central bank holdings of gold are now higher than central bank holdings of U.S. Treasuries for the first time in decades. And I don't see that changing given the size of deficits that we're running and just the fiscal irresponsibility of uh, of our government, whether on the left or the right side of the aisle, doesn't matter. Nothing stops this train. I mean, they're just going for broke. And so I don't know. I mean, don't get me wrong. Eventually, gold will pull back. Gold's had bear markets, and they're long and deep. I think most recently from 2011 to 2015, gold pulled back like 40%, over the course of 4 years. And you couldn't give your gold away at the end of that. Of course, that was a great time to be buying, and there were plenty of signals for that. So I don't pretend that gold's just going to go straight to 5,000 an ounce without any pullbacks. And I'm not predicting 5,000 an ounce, so please don't misunderstand me. At the same time, I will not be the least bit surprised if we wake up a year from now and gold's 5,000 an ounce. I That will not surprise me. I'm not predicting it, but it will not surprise me. So we'll see. But I'm not selling any of mine. Are you selling any of your gold, Kyle?
Nope.
No. So when you got lots of buyers and no sellers, what happens to the price?
Keeps on going up.
That's pretty much it. Supply and demand. So, um, and I've written about this many times. We probably talked about it on the call many times, but just using the year 2000 as a starting point seems logical. New millennium, new century, new decade, new year, all that kind of stuff. Um, Gold is like almost doubled the return of stocks. I don't care if you look at the Nasdaq or the S&P 500. If you had just put all your money in gold, you'd be up a lot more, like more than 10x your money. And in the stocks, you'd be like 6 or 7x your money. Um, I'm not suggesting anybody should have done that or that anybody could have held through all that, because you would have had to hold through that 40% drawdown that lasted 4 years, and most people wouldn't have. So again, I'm not saying that that's a realistic option. Um, but if you had done it, if you just put all your money in gold in the year 2000 and went to sleep for 26 years, and you woke up today, almost 26 years, you'd be a pretty happy camper. So gold is just it's a staple in our portfolios. We'll always own some gold. That's just a great hedge against chaos, and chaos is it's out there. So we'll always own some. Right now, our gold position is the highest it's ever been because we don't want to sell any. But eventually, we will take profits and we'll take it down to a much smaller position size. But we probably won't exit it completely ever. I just think it's a good hedge.
Hmm. And so, one thing that I think needs to be brought up is when you talk about price targets and how high it can go, looking at a monthly chart. So, that is zooming out about as far as you can go. We just broke out of the highs that were set, or not just broke out of, but the new highs that came in, the prior ones were set in 2012. So that's 13 years of just kind of doing nothing. And now it's been running for 1 to 2 years. So to think it's at the end of its run and we're at a bubble with gold, I think would be premature. It certainly can go, but I think one other important part is with the chaos hedge is gold can be pretty chaotic. So it doesn't always move in fluid, up and to the right type motion. It can definitely pull back pretty good on you. And that's where that chaos hedge allocation is important, is that putting all your money in gold, you're going to wake up one day and see a lot of red on your screen, feel real down, and get shook out. So, again, a reasonable allocation, but there's really no reason to say that it's over now. It's hard to put a price target on it, but 5 or 6 thousand, I don't think is out of the ballpark. But timing is the important part. Is that this year, next year, 5 years from now? That's challenging to say. I think certainly there's going to be a little bit of consolidation somewhere in there.
Yeah, you would think it's going to have to go sideways for at least a couple of years after this run. It's just pulling forward so much of the future return. But it also depends. I mean, if you're going to price it in dollars, and dollars are going to keep getting smoked because we just keep printing them to pay, debts that we're we're borrowing and can't really afford to pay off. It's one of those things where once inflation starts to run away, I mean, if they're going to price it in dollars and dollars are just going to continue to get inflated away, that I don't know, nothing stops that train either. So it's kind of I don't know. I'm sure people have said that before throughout history, and of course, it's always turned out that the dollar hasn't died yet. But world reserve currencies do change. They usually last about 100 years, and then there's a new one, and that's happened many times throughout history. And the U.S. dollar is knocking on the timeline there, and so maybe it's time for a change. But I don't know. I'm not a doom scroller. Like everything's going to end and you got to put all your money in gold. That's not my thing. But it is doing well, and it's way overbought. It's way overextended. But these days, man, things can, I was just looking at meme stocks earlier. The meme stocks are leading the market again, and so it's a different environment. I'm not saying this time it's different, right? That's not what I'm saying, but it's a little bit of a different environment where you everybody sees gold now on Reddit and all these things, and they're like, "Gosh, why am I messing around with AI stocks when I could just be like buying gold? Like gold is the new meme stock. It's now all over Reddit and all over social media, and so once those traders get a hold of it, there's just a whole bunch more people who've never really bothered to own gold before who are trying to do so, at least in the financial markets, maybe not physically. And I've actually heard that. I heard like there are still a lot of gold dealers that are like not selling very much gold in the physical markets, despite what the price of gold is doing. I mean, it's just interesting that people want to buy it when it's on a chart on their screen, right? But they don't
Hmm.
want to buy it when they actually have to, part with cash or write a check or whatever and receive gold and put it in their safe. It's an interesting, I don't know, it's just the financialization of everything, and now things are going to be tokenized, and I don't know. So it could just take a whole nother leg higher, right? And until it begins to break down, I don't see any reason to jump off the train here. Um, I don't know. We'll see. We'll be taking profits eventually, though. I know that, but we can afford to give a little bit back at this point. I mean, geez, gold could drop by 10 or 20%, and we'd still be up a lot. So
Yeah.
um, I'm not real worried about trying to pick the top. We'll just let it run for as long as it can and be uh, be prudent and logical about when to start taking some profits off.
Yep. And it's one of those things, picking tops that's challenging, but having a plan in place to manage the risk, that's always a great way to go. And you cannot lose if you do that. So trailing stops and just don't let it work against you too much. Turning back to stocks, just again highlighting sectors and how things are performing. You know, it's surprising. So utilities, I was looking at the kind of sector scoreboard that I look at, just measures how many stocks are over the relative averages. In utilities, 100% of them are above every average. Now, I didn't take the time to dive in too much, so I'm wondering how many utility stocks there are, but interesting that they are all going higher, but with rates going lower a little bit, perhaps that makes sense. And then the other ones is healthcare and technology, which no surprise there. And then the weakness, still kind of the defensive names. So like consumer staples, materials, communication services. But, Shane, you kind of laughed on the utilities. Have you checked in with that space at all or kind of understand why it seems to be doing that?
Yeah, well, I guess the rates down factor is probably a little bit to do with it, but I think, I mean, I really think that it probably has more to do with AI than anything else. And it's just kind of funny to me to think like, people will call us, right? And they'll say, "Hey, I want to get into this AI. I want to buy AI." And they actually have no idea what they're really asking us to do. You know, like what does that even mean? And I think that's what I'll have to start asking people when they call and say that. Is, what do you mean by that? And I don't think they'll know. I think they'll just be like, "Well, I heard about it. So and so told me he's making money on AI," and I don't think most people have any idea what they're talking about because I mean, we're pretty close to this, and I don't even really know what they're talking about. That doesn't really mean anything to me when somebody says that, right? It probably mostly means that they want to buy Nvidia and AMD and I don't know, maybe these hyperscalers, but like. I don't know. The hyperscalers, right? The Microsofts and the Amazons and Meta, like they're just spending money on AI. They don't they don't generate very much revenue from it, right? And compared to how
Hmm.
much they're spending in CapEx, they're not generating anywhere. Like it's the payback period on this spending is going to be a long. Um, so it's kind of funny to me that I don't really think anybody knows what they're talking about when it comes to like, hey, I want to buy AI. And the truth is that you can own Walmart and be exposed to AI, right? Walmart popped the other day 5% or something because ChatGPT, OpenAI announced that ChatGPT was going to allow you to buy stuff from Walmart right inside their little app. So if you go to ChatGPT and say, find me, a bicycle, and the Walmart ad comes up for it, and you'll be able to just go ahead and buy it and check out right there from Walmart inside of the app. I haven't researched it, but something along those lines is basically what they announced. And Walmart, which is already trading at a crazy inflated price to earnings ratio, went up 4 or 5% just on that little news. And like partnership headlines are always kind of a hit or miss thing. Most often they're a spike that you sell short or fade a little bit. That's usually what happens. Get a headline, get a pop, and then over the next few days it kind of works its way back to where it was before the news came out. So I mean, you could buy Walmart and have exposure to AI, right? You can buy pretty much any of the greatest businesses in the world are going to have some exposure to AI because the AI tools that they use are going to make them more efficient, maybe allow them to hire less people, get things done with a better profit margin. And so if you just go out and own a basket of the best businesses in the world and let them figure out how to use AI to their advantage and increase profitability, that's probably the best way to gain exposure to AI because buying Nvidia at almost $200 a share is probably not going to lead um, to good 5 and 10 year returns. Maybe I'll be proven wrong, but I don't think that paying those kinds of multiples, even for a growth business, Nvidia best business on the planet right now. Hands down, I hand it to them. But and we bought it, at $90 in April when it dropped to 90. It traded at 10 times sales. I was like, boom, I'm buying it at 10 times sales. There are not very many businesses in the world that I think are actually worth 10 times sales, right? That's a very elite group of businesses that I'm willing to pay that much for. But when Nvidia drops the 10 times sales, you buy it. That's what you do. And we did, and we bought it at $90, and now it's 200. I don't think that it's going to go from 200 to 400.
Mhm.
Not anytime soon. So anyway, long-winded way getting back to utilities is that I think that the utilities are trading on AI because none of this AI stuff's going to work without power. And I kind of pointed that out in my commentary as well. Like you get these announcements of, hey, we're going to do 6 gigawatts of GPUs, which is just a really goofy way to quantify, the amount of business you're doing together. Normally it would be, hey, we're going to deploy 100,000 GPUs, or we're going to spend $4 billion on GPUs, uh, either a number of units or a dollar amount value. Quoting it in terms of energy usage is just really weird. And I was talking to a friend and client and business associate, and he was like, "Yeah, I think they're just trying to send consistent messaging to the government that like we need more power. In order for any of this stuff to work, we need more power. Because right now, the amount of power that we produce in the United States, there's just not enough to make all these data centers and GPUs run. Certainly not at full capacity, but not even at like half capacity. So they say things like, oh, 6 watts of GPUs, and you don't really know, um, that's the maximum power that those GPUs running at full capacity would draw. Uh, but you're not going to be able to run them at full capacity for very long before they burn out and you have to replace them. So when somebody says, 6 gigawatts of GPUs, they're probably only going to use, I don't know, maybe 3 or 4 gigawatts of power at any given time. So it won't be always a max draw. But I mean, even if you haircut it by 50%, say the six gigawatts announcement is only going to draw 3 gigawatts, average per day or per hour, kilowatt hour, whatever, however you want to. We still don't have enough power to do even that. So I I think that's all the power companies are utilities.
Yeah.
So I don't know. I haven't looked at the XLU or the whole index like you were saying. Um, but I assume you're going to get at least some. Yeah. So Constellation is one of the big holdings. It's 8.8% of XLU is Constellation Energy, which is a nuclear power provider. And they've been, and VST Vistra is another one in the nuclear space. That is 4.69% of XLU, the utility ETF. I think Nextera, excuse me, NEE is another one. But all of these are trading on the basis of like all these AI data centers are going to need to provide a lot more power. So I think that's really what's driving utilities. And the fact that the Fed's cutting rates is probably just a little bit more wind in the sails.
Yeah, that makes perfect sense. And I like where you're going with that. You go back to the old gold miners back in the day, and it was always you could either go mine the gold or you could sell shovels to the people that want to go mine the gold.
Yep.
And maybe that's one of those plays where instead of trying to chase the AI trend and go buy an NVIDIA, you could just do utilities because somebody's got to produce that power.
Yeah.
It's interesting too, this whole AI thing. Everyone is aware of it and they have kind of hit this point, I think, where they're just focused on that is the area to focus and that's where all the money is. And it just reminds me, I think you have it in our recommended readings, but that Thinking Fast and Slow by,
Yeah.
was it Daniel Kahneman?
Yep.
And what happens is that you get primed. So you start to think AI, and everywhere you look, confirmation bias is kind of what leads you. So everything confirms this idea that AI is leading. But I just ran a search this morning, which is simple. Anyone can do this. You can go use a tool like barchart.com and just sort top, by returns year to date, what stocks are there. And the Nvidias or the AI stocks, they're not the ones that came up. Just doing the S&P 500, you had Robinhood, that is up 265% year to date. Western Digital, not really sure what they're doing, 174%.
That is
Seagate,
actually that is AI related. Sorry, I didn't mean to
okay.
interrupt, but I'll tell you why in a minute.
Yep. Seagate Technology, probably another tech, so it could be AI, 160. Newmont Mining, which no surprise, gold, right? That's what they do, 155%. And then just some others like NRG Energy, GE, Vernova. So the bottom one there, that GE Vernova up 89%. The point being there is that there's all these stocks out there that are not necessarily AI related and they're doing very well. So just focusing on Nvidia, you miss a lot.
Yeah, well, and a few of those, like I said, those are I think a few of them are like GE Vernova is probably AI related because I think it's energy. NRG is probably again AI indirectly, but they're not Nvidia and AMD, which are the ones that everybody wants to talk about all the time, right? That's pretty much what I would say because also the Seagate and the Western Digital and the Micron, those are all memory providers. So those guys are putting the memory on these GPUs. And so there's a bottleneck in memory, is what they're saying, due to AI. The memory chip makers have really run up. But these are all kind of tangent AI ways to play AI, more like picks and shovels rather than like hey, I want to buy OpenAI because I think they're going to make a lot of money on Chat GPT someday. Well, first of all, OpenAI is a private company, so you can invest in that, but you can't just go out and buy stock. If you're a accredited investor, I'm sure you can find a way in because they need your money, like big time, because they don't make any. They've lost $14 billion already this year, and committed, hundreds of billions, if not $1 trillion more, and they don't make any money. So where are they going to get the money from to build all these data centers with Oracle and buy all these GPUs from AMD and do all these announcements? They're going to get it from finding, new ways to raise new cash from investors who don't know any better. And
Yep.
it's all on the hopes that someday they'll figure out how to make money at it. But right now, they don't make any money. I mean, maybe that Walmart deal will give them some revenue because people do buy bicycles from Walmart. And if they do it inside of Chat GPT, maybe Walmart will give OpenAI some of that revenue. So maybe they are finding a way to make make a little bit of money, but Walmart's going to sell the bikes whether you could buy them in Chat GPT or find them on Google. So I don't know how much revenue Walmart's really going to share with these guys. And so, yeah, I mean, I think the picks and shovels are a way better way, certainly at this stage, to take advantage of AI and just owning the best businesses in the world that are going to figure out how to apply AI tools to become more efficient is, I think, the best way. Because a lot of these other companies are burning, they're just burning capital, trying to figure things out. And all the other companies that aren't just burning capital are sitting back and reaping the benefits of all this excess capital burn and malinvestment. I mean, I don't have the direct quote, but Mark Zuckerberg, the CEO of Meta, Facebook, whatever, um, has been quoted as basically, and I'm paraphrasing, so I'll get it wrong, but he's like, yeah, it's justifiable to spend, 100 billion, 200 billion, $300 billion on capex for data centers and AI infrastructure, even if it turns out that 50 or 100 billion of those dollars was totally wasted. I'm just like, oh my gosh, that's crazy. It's just like such a crazy way to think about the world because these guys are all terrified that someone else is going to build a better mousetrap quicker, and all it's a winner take all world, right? The power law kicks in, and you'll have some number one company that gets all the revenue in the space, and everybody else will be fighting over peanuts. And so these guys are ultimately just throwing money at the problem, trying to make sure that somebody doesn't get to that better mousetrap faster. And the truth is that it probably is true that there will be one major winner, just like there is in almost every industry. There's one major, obviously best in class, and then everybody else fights for the number two spot. And so what does that tell you about all these different companies that are spending all these untold billions of dollars? Most of it's going to end up being totally wasted. You might as well just go light it on fire. You just don't know which dollars they are that are being wasted. So it's a I don't know. I feel like we've seen this movie before and we know how it ends. We just don't know when, and we don't know who's going to come out on top. So um, I don't think it ends well though.
Yeah. And you mentioned where does the cash come from? In OpenAI, they just had a press release not too long ago that they sold $6.6 billion of shares, raising more capital, and that put them at a $500 billion valuation, which just blows my mind that a private company would be worth that much.
Yeah, a nonprofit company, no less.
Yeah.
Imagine that. They're not even supposed to make profits. So it's just like so much of it doesn't make any sense. It's such a what's I don't know. It's like a shared psychosis, across the whole market where that was the title of my commentary. Everybody knows, nobody cares. So like
Mhm.
we can talk about all this logical, rational investment thesis that we want. Doesn't matter. Stock just goes up, until someday when it doesn't. But while it does, well, it's like musical chairs. If the music's playing, then you keep walking around looking for a chair. And when the music stops, somebody's going to be without one, and you don't want it to be you. So it's really gnarly, man. It's an interesting world out there, and I think a lot of people are just going to get absolutely run over. Especially, this is how it works in any type of mania. The last people in, you know, they're everybody can look at it and say like that's crazy, but they keep doing it, and then they're the ones who get totally wiped out. So I don't know that we're necessarily there yet. It could go on a lot longer, a lot longer than anybody thinks possible. And so I'm not here to tell you that it's time to short the AI stocks today. They could keep going.
They
And what
certainly
if
could.
you have some others on your list too, like quantum computing, right? Quantum's another one that's like these quantum computing companies have gone up, some of them like 20,000% in the past year.
Yep. So those are the other ones I had on here. And it's funny, in reviewing, I noticed that some started off less than $1 share price. So you could call those, some penny stocks. But just wanted to point out one of them, Rigetti Computing. And I don't know what these are. So Shane, you jump in if you want. But Rigetti Computing, for the last 52 weeks, up 6,800%. D Wave Quantum up 4,400%. US Antimony Corp up 1,800%. The list goes on, but I just thought it would be fun to include these because back to the missing out on Nvidia and Palantir is another name. Some of these ones that they've certainly gone up some nice numbers, but hey, if you really want to speculate, there's some companies out there that make you rich real quick with a very small investment. I mean, when you have returns like that, that is something else.
You know what the fastest way to get poor real quick is?
Go buy those stocks with any
Yeah,
level of size.
or in any other way, just try to get rich quick. That
Yeah.
is the fastest way to get poor real quick. Um, just because these things exist doesn't mean like you had to know about it a year ago, right? Like now can it keep going up? Absolutely, no doubt. But I'm just saying the amount of risk that you have to take buying a stock at $60 a share versus buying a stock at 60 cents a share a year ago, they're orders of magnitude higher. I mean, it's just ridiculous that people do this. And now this Rigetti, I don't even know if I'm saying it right. I haven't listened to their earnings calls because they don't have any earnings. But Rigetti Computing, this one's just it's so blatantly obvious, right? Quantum computers don't exist. There's no framework at all for quantum mechanics to actually work. It's all hypothetical theory. Like everything that they do is a simulation. It's not it's not real. Like there is no tangible way forward in quantum computers. There's no quantum computer that actually exists in the world today. Like they call them that. It's like a marketing name basically, like oh this quantum computer or this it doesn't exist. It's not real. Okay. And anybody who thinks otherwise or can prove to me that there's a real quantum computer that exists in operation today, please send it to me. Send me something that I can look at and read and share it with my buddy John, who's like my favorite technologist that educates me on a lot of this stuff. But yeah, if you can provide evidence that a real quantum computer actually exists in the world today, I want to know about it. Because the CEO of this Rigetti computing company, he like literally came out and said, I don't know if it was on an earnings call or in an interview or what, but he said, it's just a research project. That's it. That's what the whole company is, a research project. There's no such thing as a quantum computer in the world today. They're working on creating one. I get that, but it doesn't exist. So for you to go pay, I don't know, what's the market cap on this company now? How many billions of dollars is this research project worth? About looks like about 7 billion market cap today, and it was 20% higher 2 days ago. So, call it not, almost a $10 billion research project that has no revenue and no product, and you want to go pay $10 billion for that because maybe someday they'll have a quantum computer. That's what's going on in the markets today. And that's what's got everybody just dumping money into the stock market, chasing these returns, trying to figure out what's going to be the next one. And I don't know. I mean, like I said, it can keep going for a lot longer. There's still plenty of money in money markets that could find its way into stocks. So I'm not saying anything other than it's crazy. It can get crazier and crazier and crazier and more and more and more expensive. Um, and the other a couple of, what's the other one antinomy or antimony, whatever that the other one was that you mentioned. I think they're in like the tungsten metal game, which is considered a rare earth, which China has a lock on. And so any company that is not in China that produces any of these rare earths, especially I think tungsten's a big one that's used in semiconductors and all this kind of AI stuff. These are MP materials and that one, and there's a USAR I think is United States Rare Earths. There's a bunch of this rare earth stuff that's going bonkers and trading at it's all pure speculation. People think they're making an investment in a rare earth or mineral company, but like these companies have no revenue. They're like they go slap rare earth on their name and they're like, yeah, we're gonna go launch a rare earth mine, and people will suddenly will be like, oh, this is the next one. Let's buy it. So that's the kind of market we're in right now. Nobody wants to buy Coca-Cola. Nobody wants to buy Procter and Gamble. I mean, it's like we're all going to be able to rub some rare earths on our skin and it's going to act like lotion, or we're going to be able to drink AI in place of Coca-Cola. Telling you, you're getting some opportunities to go bargain shopping on some of the best businesses that have been around 100 plus years, that will be around 100 plus years from now. But just like AI can keep going up, these other world-class businesses that create great consumer products, they can go down further. And so I'm not saying you should go out and load up on those any more than I'm saying you should sell all your AI stocks. But I'll tell you what, you should start building a shopping list for when the AI and the rare earths and all these speculative things, when the speculative mania is over, um, then it's probably time to, begin looking, or begin buying some of the other stuff. And it would be helpful to have a nice big shopping list of those companies and which ones you like most and at what price you want to buy them, up to. Have that ready, because when the time comes, it'll be gone in an instant.
Yep. And we'll see when that opportunity comes. But right now, it's good to be patient. I think these names we mentioned that have gone up so much, the analogy I always go back to is it's kind of like if you haven't ridden a horse before and you go out and there's some wild Mustang that's never been ridden, they might get you there really quick. But like the odds of you staying on are very low.
Yeah.
And same with these, you put any meaningful money there and you can just watch it go up and smoke real quick. So fun to talk about, look at the returns, but probably not the best for a long-term process or portfolio. But
No.
so, well, Shane, I see that our time is about up here, so I can let you get back to your day. But, thanks for jumping on here again. And AI will dominate headlines, I'm sure, at least to finish out the year. But we'll see if we get some more exciting news or maybe that sell off comes along. But right now, hard to predict, and it does look like the trend is up. So,
All right, man. Well, don't sell your gold yet.
you do the same. Hold on.
All right. See you later, man.
Have a good one.
Bye.
Special thanks to our audio engineer, Stephen Crowley, for mixing this episode. This podcast expresses the views of Shane and I as the date indicated and are subject to change without notice. Elevate Capital Advisors has no duty or obligation to update information included. All information is for educational purposes only. Certain information concerning economic trends and performance is based on information from sources deemed to be reliable and has not been independently verified for accuracy. Wherever there exists potential for profit, there's also the risk of loss. This podcast may not be copied, reproduced, posted in whole or in part in any form without prior written consent from Elevate.